Hello everyone, this is Paul from the APN Academy, and in this video I'm going to be looking at support and resistance. Remember, we are still continuing with the beginner series, and this is the 12th video. So after today's video, you're going to be able to mark your support and resistance levels. You're going to be knowing what support and resistance are, and then you can be able to draw them and how you can utilize them, right? So without wasting time, let's just get into the video. Now, what are we going to be looking at in the video? We're going to be looking at support and resistance definitions. What are they? Then also we are going to be looking at how to identify support and resistance, right? So what is support? Support, okay, in a layman's language, when someone tells that in a layman's language, or in a kid, or when an old person who doesn't understand these things asks you, what is support? Support is simply something that is holding something. Let's say something wants to fall down, and then it meets something that can hold it here, right? Or to bounce off, or it can reduce the speed, right? So this is what we call support, right? Now, what about in the language of the markets? Now, in the language of the markets, support is a level or it's an area. Why are we saying level and area? Because we're going to see in the next slides that you can use either a line or you can use a slab. So we're saying a level because it can be you can use a line or you can draw using an area, using a slab, like we're going to be seeing a rectangle on the MetaTrader. Now, that's why we're saying it's either a level or an area below current price where buyers previously came into the market. For example, the market, the price moved down, right? Then there's an area where buyers started coming to the market. So this becomes our level of support, right? We're saying where buyers previously came into the market. Remember, buying, we're expecting the price to go up. Now, we expect when price comes back here, we expect that again, buyers possibly could come into the market. Listen to that word, possibly, not must, but possibly. That's why we're saying that where buyers previously came into the market, and again, we expect buyers to come into the market. Again, we expect, this is the key word, we expect. It's not a must or guarantee that's supposed to happen. Are we together? So this is what makes a support. It's a price below current price. For example, let's just make it simpler. If price is coming, it is coming down, then turns from here, right? This is current price. So this level where price turned from down here is what we are calling a support. Are we together? This is support, right? And then the area where it turned, let's say it went up, then it turned to come down. The area where it turned from up here to come down is what we're going to be calling resistance in the next slide, right? So in this slide here, we're saying support is an area below current price. If this is where price is, the current price, where price is at the moment, the area below it where price turned from. That's why I kept emphasizing in the previous videos that turning points are very important. So where price turned from previously, price to go up, you just mark this area here. That's your support, right? Now, sometimes maybe those who are new, sometimes later on you're going to be hearing that it's called demand area. And those who have already been trading, most likely you've heard about support being called a demand zone, demand area. Why is it called a demand area? If you guys know the definition of demand, demand is where buyers are buying at low prices, right? When prices are low, buyers are buying. That's why there's a saying that buy low, sell high. So demand, demand is for buyers. Buyers are coming to the market. And where do buyers come into the market from when you're trading? At support level. So that's why sometimes this support level is called a demand zone, because we expect buyers to come into it. If this is your support, we expect buyers to come here. That's why we're calling it sometimes a demand zone. I hope I make sense. Now let's go on. Let's go on. Now, the next one we're going to talk about is resistance. It's just the opposite. I'm not going to spend a lot of time here. It's just the opposite of support. Now, here, this is a level or an area above current price where we expect, where previously sellers came into the market. And again, we expect, guys, listen to that word. We expect. It's not that it's a must that sellers are going to come into the market, but we expect sellers to come into the market. If price went up and turned from here, this price where market turned from, remember guys, the word turning point. Turning point is very important when you're trading. So this is your current price, right? We're saying this is what we call resistance. We're together. Why? Because sellers came into the market at this price. Now we expect if price comes back here, we expect again sellers will come into the market. But sometimes, why are we using the word expect? Because sometimes the market can break through the resistance. Also at support, sometimes we expect that when price has gone up, we expect when it comes back here, buyers come in. But sometimes the market can breakthrough. Are we together? So that's why we're using the word expect. It's not a must that buyers or sellers will hold on to support and resistance. That's why we're using the word expect. So be keen with that. Now, sometimes also resistance, just like a support. Sometimes resistance is called a supply zone. Why are we calling supply zone? You know that supply, those who have done economics, you know that supply is for sellers. Sellers are the ones who supply. When for example, someone who sells mangoes is supplying mangoes. He or she has mangoes to supply while the buyers have the money to buy. The buyers have their wants. Now you have a want, but you need to support it with money. You cannot demand for something when you don't have the ability to support it. And you cannot say that, you cannot claim that you're supplying something when you do not have that something in stock. So supply, for you to say I'm supplying mangoes, it means that you have the mangoes in your garden or you invested them somewhere, they're in your store. That's why we call it supply. So resistance sometimes can be called supply area. So when you hear someone saying demand zone, supply zone, it's the same thing as support and resistance. Do not get confused about that. Are we together? I hope now you understand the terms of support and resistance. Now let's go a bit inside. How do I identify support and resistance? I have already mentioned briefly what we how we identify support and resistance. And the major thing that we're looking at is the turning point. And remember in the previous videos, if you, in case you've been following the beginner series ever since, I mentioned that turning points are very important. For example, if the market is going up, when we're in an uptrend, we are making higher highs and higher lows, but we have these turning points that are making the higher highs and higher lows. These turning points are very important. Alternatively, if the market is going down and it's making lower lows and lower highs, here we are making lower lows, lower highs, but just observe still what is making the lower lows and lower highs? Turning points. Are we together? Now, when you observe, we have the market turning. The price went up, then turned and came down. Then also here turned and went up. Now, in the process, when the market is down here, when let's say it has already turned also and it's in the middle here, this is our current price. This at this moment is our resistance, and this at a moment is our support, right? Remember, at resistance, what do we expect? We expect sellers to come into the market, but the moment resistance is broken, right, this becomes support. Are we together? Let me just clear this so that we draw it properly. Let's just go through it once more. When the market goes up, creates a turning point, turns here and comes down, right? And then turns from here and then starts going up. Remember, we have said an area above current price where we expect sellers to come into the market, where previously they came into the market, is called resistance, or what sometimes you can call supply zone. This is the resistance or the supply zone, right? This is support or the demand zone. So this is your current price. We're saying this is our resistance, this is our support. Now, when the price moves and reaches here, we expect sellers to come into the market. But the moment sellers do not come into the market and they break through, it means that this resistance is no longer resistance, but it's what? It's support. What is making it support? Because now it is below current price. If this is current price, it means now it is below current price. So this is current price. Again, price will move now. When it finds a level where sellers come into the market and then starts coming down, it creates a new resistance. Are we together? So this becomes your new resistance, supply zone, and this becomes your new support. It's now no longer a support. I made some few notes there for those who are taking notes. I made some few pointers for you. Let's just first understand it. That's why I'm first explaining. Then we shall do this point as a summary. Now, this becomes your new support, stroke, demand zone. Are we together? The market keeps moving like that in an uptrend. But the moment this resistance holds it and then breaks down, it means that now the buyers have failed to continue moving up and sellers have come in. Now, when sellers come into the market and they make a low, turn from here, make a high. Now, this is your support, stroke, demand zone. This is your, let's say price turns back down. This is your resistance, stroke, supply zone. Now, we expect when price comes to the support, what do we expect? You can guess that. Let me give you 2 seconds. If you said we expect buyers to come in, you're correct. But the moment buyers do not hold, sometimes they will try to push the market, but they will not hold. And instead, what will happen? Instead, they will just break through. Now, when they break through, and this is your current price, it means that this is no longer support, rather it has become resistance. This is no longer support, rather it has become resistance, stroke, supply zone. Are we together? That's how the market moves. Now, if again the market turns from here and then comes to test this area here, this becomes your new support stroke demand zone. Now, again, when the price comes back here, we expect buyers to come into the market. The moment buyers do not hold and the sellers just continue pushing down, this again will become resistance. Are we together? So in a nutshell, how do we identify support and resistance? We identify support and resistance through turning points. When the market is moving up and turns to come down, this has made a resistance because this area here is above current price. Now, when market turns up and this turning point is below current price, this is current price, this becomes your support, this is your resistance. Are we together? So that is how we identify support and resistance, right? Now, also what I would like to bring to your attention is sometimes we tend to make it a different topic, but also it lies under support and resistance is diagonals. I showed you guys when we were speaking about MetaTraders that we can have horizontal support, we can have horizontal lines. You can draw your support using horizontal lines, or this is resistance, sorry. You can draw your resistance and support using horizontal lines or diagonal lines. Now, when you draw using horizontal lines, that's what we are calling support and resistance, the original one, right? What people mostly know, but also diagonals form support and resistance, but we gave them a name called trend lines. So also we mark them using turning points. For example, if the market is moving up, it turns from here, creates this resistance, comes down, turns from here, creates this support, goes and creates a new higher high, comes and creates a new higher low, goes up and creates a new higher high, higher low, like this. Now, you can decide to join this horizontally like this, right? Or you can decide to join them using diagonals. Now, when you join them using diagonals, you're making what we call a trend line. Are we together? This becomes a trend line. So this upper one can be a resistance. This one can be a support. Why is this one a resistance? Because it's above current price. Any level, any area above current price where we expect sellers to come into the market, we call it a resistance. And any area or level below current price where we expect buyers to come into the market, we call it the support. But now, when we're drawing diagonals, we do have a rule. We do have rules, sorry. Now, if the market, let's say, we need, what are the rules that we need? We need 2 or more turning points, right? This is rule number 1. Then rule number 2, we take trades, the third touch point. The third touch point is important, where we take our trades from, right? Then the third rule is we start from the lowest or highest wick on the first point, first turning point. On the first turning point, we start from the highest or lowest turning point. What do I mean here? Remember, we said we need 2 or more turning points, right? 2 or more turning points. But now, on the first turning point that we are considering, we are going to consider the lowest or highest wick. Now, for this case, for example, if let's say I want to draw a support line, a support trend line from, and I'm considering this is my point 1, this is my turning point 2. Remember, and for trend lines, we draw them using the diagonal. We draw them using the diagonal line on your MetaTrader. And secondly, we use the candlestick chart. Do not draw this one. I'm just using the line here because I'm illustrating to you. But when it's on a real live chart, do not draw it. Do not turn to the line chart. Then you draw a diagonal line or your trend line. Make sure you leave your chart in the candlestick chart so that you can draw your trend lines. Are we together? So sometimes you may need to zoom in your chart, then you can see properly the turning points. Or alternatively, you can just look at where the market went up, turned to come down. Then just where you can easily observe turning points is where the market went up and then turn to come back down. Then also turn to go back up. This is automatically a turning point. But if you're struggling with it, you can first put it in a line chart. Then you can just mark them. You can just mark that area. Then also you observe your second turning point, mark that area, and you go back to candlestick chart. Well, now, why do we use candlestick chart? Because we would like to get the median or the average turning points. Because in this turning point, we may have several candles, right? This turning point, we have several candles here, and also here we may have several candles. right? So we're saying that on this first turning point, we're looking for the lowest wick, right? We're looking for the lowest wick. While on the second one, we want to cut through as many wicks as possible. So our trend line will cut from the lowest to the, then here it will pass through as many wicks as possible. Or the same applies to when you want to draw a resistance, right? When you want to draw a resistance, let's say the market is coming down, right? And I've identified this as my first turning point, this as my second turning point. Now here I'll look for the candle with the highest wick. Are we together? Then here I'll make sure that I'm cutting through as many wicks as possible. So I will join my trend lines like this, right? Highest wick possible. Then here I'll join through as many wicks as possible. Do not worry, this is just theory. We're going to look at all this on the chart, right? Just stick around until the end. I'm just trying to make you understand theoretically, so that when I go to the chart, you do not get lost. And if I'm also fast for you, make sure you slow down the video so that you can watch it properly and understand. Are we together? Or you can rewatch it. You can watch it more than once so that it can make sense to you, right? Now, this is what I've tried to explain to you. Now, let's look through the pointers that I came up with. First, I've talked about the turning points, how they're important. Turning points make for us the horizontal support and resistance, and also they help us to find the trend lines. And then we also mentioned it can be horizontal or diagonal, which we have mentioned to be a trend line. And then also we said that we can use slabs or horizontal line. Then there's something I did not explain properly here. These slabs, if you want to use a slab, make sure it's also you're using a candlestick. You're using the candlestick chart. And if you want to draw using the horizontal line, make sure you're using the line chart. We're just going to go over that in the on the charts briefly just. So then also if you're using we spoke about the breakthroughs. If you want to use the horizontal support and resistance, also the trend lines can be broken. The support can become resistance and resistance can become support. So these are the points that I was explaining prior theoretically. But now this is just theory, and we all know that trading is not theory. Trading is practical. Trading is practice. Let's go and see how we can do all these things on the chart, right? Okay, so I am on my trading view. This is another analysis platform that you can use. I know we have been using mostly MetaTrader, but also this is another platform you can use. You can just go to tradingview.com, then you can be able to get an account and you start using it. There's a paid version and a free version. This is a paid version, but you can start off with a free version. There is no problem with that. So we say that we can use a rectangle. Now, this is the rectangle I'm talking about. It's also there on a MetaTrader. Now, this rectangle, we said we're using it in candlestick chart, right? And when you're drawing the rectangle, make sure if you let's have chosen to use this point here. Let's say if I've chosen to consider this turning point here. This rectangle here should not cut through the candlestick body. It should only cut through the wicks, right? For example, if I've decided to use this wicks here, this turning point, sorry, I'm not supposed to cut through the candlestick body. Like some people draw it like this to cut through the candlestick body. It should not cut through the candlestick body. Just draw it like this, right? And extend your rectangle to the right, because we expect price is moving towards our right, right? It's moving this side. Price is moving towards this side. So this is our right, this is our left. So make sure you extend your rectangle to the left. Alternatively, if you want to draw using a horizontal, we said you use a line chart. So you'll just come and change to line chart, right? And we can put our horizontal line here, right? I'm using dotted lines, but you can also use a complete horizontal line like this, right? It doesn't matter any that you've chosen to use, right? So let me just start afresh. Now let me put a horizontal line here, plus also a rectangle for those who want to use rectangles, right? So I'm going to consider this point here, and we are going to replay, right? We want to implement whatever we have studied. Now we have said that this is a turning point because the market went up. Just look at this, the market went up and then turned here. Now you're going to hear severally, it's true. I'm not saying it's wrong. Most people are going to say that you should look at historical turning points, which is true. But why I do not agree with that is you're going to find yourself failing to know which one should I consider, which one should I consider, right? So in simple terms, if you want to mark support and resistance easily, or if you want to identify support and resistance easily, just identify the immediate turning point, because even this turning point here, if you're to zoom out or zoom in, you realize that it is reacting to a historical turning point behind this side. I don't know if I make myself clear. So do not struggle looking for historical turning points. Just look at the immediate one. The time frame doesn't matter. Just look at the immediate turning point. Are we together? The immediate turning point, then you consider it. For example, this one, the market went up and it has turned from here. So this is the turning point I'm going to consider. So let's try to see how the price moves here, right? You can clearly see it has come back into this area here. We expect it to go down, right? Now, you can clearly see this level is holding price, meaning that it's a resistance is holding price. Now, we said resistance we expect price to push down or to be broken. So now, in this case, let's see what price does, right? Let's play and we see what price does. We're going to implement whatever we have studied, the horizontal support and resistance, and also diagonal support and resistance, which is the trend line, right? So let's play. Now, you can clearly see that in the process, the market is creating, it went up, came down, went up, came down. So there is a turning point here. If you want, you can also mark it. You can clearly see there's a resistance here holding price. So when I mark it using my horizontal line, you clearly see there's a turning point here. Horizontal line, we said we use the line chart. You can clearly see there's this turning point. You guys see it? I've just marked it using this the red line, right? And you can clearly see that our price is holding it. Let me just go back to the candles. You'll see it's holding price. Are you seeing? It came here, it was rejected, came here, it was rejected. So meaning this is an important turning point. So let's continue. You can clearly see these levels are holding price, right? So again, the price created a turning point here, meaning this is a new support, right? So price did not break the support. Let's mark it. Are you seeing? It tried to fake out, but later it was rejected and closed within there and then came back into this region here. So let's try to see again if it will break this area here, right? So attempted to break the area, but failed, right? Again, broke back below. Are you seeing price is respecting this area here, right? So then finally broke below. But you can clearly see again, the area is very important. Of course, these are going to happen in the market, false breakouts and there, but it's always going to respect the important turning points that it had, right? So we have this turning point being respected here. Price came, it was rejected. Price came, it was rejected, right? Then finally it broke down and then it came back to retest it, right? Now, I want you guys to observe this. The market created this turning point, and this turning point. So these turning points can also give us the diagonal, right? The diagonal that we want to draw, the trend line. So remember the rule says that from the highest point, then cut through as many wicks as possible on the second point. For example, for us, we're considering this first turning point here. This is the second one, this is the third one. These are the ones that I've chosen to consider. So this second candle has no wick. So I'm going to just cut through here and just on top of the candle, not cutting the body. You should not cut the candlestick body, guys. Make sure you do not cut the candlestick body. So I'm just going to draw my diagonal trend line from there like this, right? I'm not cutting the candlestick body, the red candlestick body. This candlestick body here, I'm not cutting it, right? So you can clearly see the price also is also reacting on this, right? So now let's play and we see, right? So you can see price is acting on it now. Once price breaks this area here, now we can just shift this to this area here because now the price is moving. So let's just extend it like this. So when price breaks above, this is at this point, this is a resistance, right? This is a resistance at this point because the price is below it. The moment price breaks above it, it will become our support. But for this point, it's still resistance. Are we together? So let's continue. This resistance holds price, right? But also remember, we have broken above the diagonal resistance. Now, the diagonal resistance, you can clearly see is also holding price. Now, since we're above it, let's see. Now, price breaks above that point, right? Now, when price breaks above, what do we expect? We expect it to come back and retest. You remember that knowledge we spoke about just earlier on, or of higher high, higher low, higher high. So now the price made a high, a low, a high. So what do we expect? The market to give us a pushback down. So let's see if the market gives us that, right? So the price comes back here, right? Now, what is the importance of support and resistance? The importance of support and resistance is simply where we take our trades from, right? Where we take our trades from. So if we were to take trades, we're not at that level of taking trades, but if we were to take trades, we would be taking our trades from this point and from this point. But this is our daily time frame. So we don't take trades in daily time frame. We're going to come to that in the next videos, right? So This resistance held price and pushed it back here, meaning we have fulfilled higher high, sorry, high, low, higher high. Now we're coming to make higher low, right? So is the market going to give us a higher high? Let's see, right? So let's continue. See, price faked out still, but closed above here. Let's see if it will continue. It will make a higher high. This resistance is still holding price. Resistance is still holding price. It came back down. This level is holding price. Are you guys seeing it? Now, remember what I told you guys, that the market does not move smooth like this, the way we expected. But as long as when the market creates a high, a low, as long as this low is not taken out, we're still in an uptrend. Indeed, the market went up, then created a higher low. As long as this higher low is not taken out, we're still in an uptrend. So the higher low has not been taken out. We're still in an uptrend. Are we together? So let's see how the market goes. So that upper resistance still holding, came back. It's still consolidating in between here. So let's see. Now, this is the first time the price attempted to break above this resistance, right? So let's see if we actually break. Now, we broke and then came back into this area here. Are you seeing? Now, higher high, higher low, higher high, higher low. Now, as long as this low is not taken out, we're still in an uptrend, right? So let's see if the market actually will respect that. Let's see. See, the market kept pushing up, making higher highs and higher lows, higher highs and higher lows. Are you seeing? The market kept making higher highs and higher lows. Which higher highs and higher lows am I talking about? Higher high, higher low, higher high, higher low, higher high, higher low, higher high. You can see the market printed this higher low here. As long as it's not broken out, the market is an uptrend. So higher high, higher low, higher high. Now, I'm trying to implement all the aspects that you spoke about theoretically into the practical bit. We have put our trend line here, but also alternatively, if you wanted, you can put a trend line down here, because we had this turning point here. This is the turning point I'm talking about. We have this turning point, we have this turning point, we have this, we have this. So you could also have a trend line down here if you wanted. So if anyone had to use a trend line, you could use it using the same rules, right? If you had to consider these two turning points, this would be your first turning point. Second turning point, you see I'm touching the lowest wick, but also you're touching as many wicks as possible, which is 1, 2. So this would be my third touch point, right? Here. I would be taking a trade from here, which is aligning with this or confluencing with this slab here. And this is my entry point. Or if someone wanted, if they wanted to consider this from here, still this would be my second, this would be my first touch point. This is my second touch point, and still this same area would be my third point. Remember, we said we take trades, or the third touch point is our most important point where we want to take our trades from, right? Now, you can clearly see here, this is an example of an uptrend that we have applied. We have tried to apply the support and resistance on all the aspects. Are we together? So when you continue playing, we see until the market kept going up. Let's see where the market starts giving us a downtrend. Let's see where the market gave us a downtrend. We are still in an uptrend. So the market is attempting to take out this level. Let's see if it will actually take it out. Still not taking it out. Now, remember, we said every turning point in the market is important. So we have this turning point, and also we have this turning point here. Remember, if you're using a rectangle, draw only the wicks. Do not cut the candlestick body, but only the wicks, right? So this is a resistance. This is our support, right? Guys, this is our resistance. This is our support in this case, because the market went up, down. Now we are up. This is our turning point, major turning point, but also we have a minor turning point here, though we're going to consider these major ones, right? So let's continue. You can see this level pushed the price back down, right? Now you can see the price attempted to break below, but it was rejected and closed inside. So let's see if the price actually, instead it gave us it's giving us a false breakout. Most people tend to be trapped by this. This is a false breakout. Why? Because the market did not give us a loss of momentum. We're going to come to all those aspects, or we would actually have videos on that, but we're going to give it to you in a simpler form for the beginners, right? So the market gave a false breakout and came back into this resistance. Now, what do you notice here? The market is giving us equal highs and equal lows, equal highs and equal lows, meaning the market is ranging. Are we together? So let's continue. The resistance again holds price, right? It comes back here. Again, you can see this support is holding price. Are we together? So let's see where actually it properly breaks out. of this. Now, this was the first time the market gave us an aggressive break. Also here, there was a break. This was a break. Market broke, retested with a loss of momentum here, then gave us this push down, but later on broke back above here. You can clearly see these are, every turning point here is a resistance, right? If I were to mark every turning point, for example, the market broke, it made a low, lower high. So this is a turning point here. The market broke above it, making it a resistance. This was a resistance by then. But when the market broke above it, it became a support, right? So it pushed up, higher, high, higher, low, higher, high, like that. I don't want to mark every turning point. I'm just marking the major ones. But for purposes of practice, you can mark every turning point just to see how price behaves. Now, this is the first time the price aggressively breaks out of this, right? So what do we expect? We expect price to just come back and retest this area here, which it's currently doing, right? Because this is a price, at this point here, price reached here and then was rejected. So we expect price to come back into this area. Why? Because this area has buyers in it. So when price comes back here, we expect it to continue making a low, right? This is an aggressive push down. We expect a small retracement into this area, and then we continue pushing down, right? So let's continue. You can clearly see this area rejected the price. Why? Because this area here has areas of buyers. These rejections here mean areas of buyers. We're going to speak more about them when actually in the next video about candlesticks, right? So again, what happens? The market creates a lower low, lower high, lower low. The market it's continuing to go down, right? Let me just remove this. Just put it back here. So the market kept making lower lows and lower highs. Now, this is the point I was telling you guys previously, that you do not need to start squeezing your eyes to look for historical turning points. Now, you see, we have not drawn anything here, but when price broke below this level, it retested it. And we have not, this line, we drew it earlier on, this line here. We drew it earlier on. So you're just going to be looking for where price turned from. Even if I just marked this point here and this point here, it's automatically reacting to an old turning point. So there is no need for you to start stressing yourself, looking for many turning points behind. You're going to confuse yourself. That's when you hear people asking themselves, which support am I going to consider? There are very many turning points. Just consider the immediate one, because that immediate turning point is also reacting on an old turning point. I hope I make sense. So this is how we mark support and resistance in a simple way, right? I've tried to make for you a chart that is, we have tried to replay on an active chart to make it an active chart so that you can clearly see how price acts on those turning points. I'm trying to show you how important turning points are. Are we together? So you can, what are the takeaway points from here? You can use the slabs or you can use horizontal line. The choice is yours. But also to remember is that the slabs are used in candlesticks. And if you want to use the horizontal line, make sure you're using the line chart to use the turning points. Are we together? So that was it for today, and hope you guys got value out of it. In case I was so fast for you, make sure you slow down the video, or you can watch it more than once so that it will make sense to you. And also, if you got value in it and it has really made sense to you, do not forget to hit that likes button. And if it's your first time coming across the video, make sure you click the subscribe button and turn on the notification bell so you do not miss any other upcoming videos. We do make such content every week that are detailed, that can help you in your trading journey. Have a great time.